Here's a Bitcoin update for January 2024. I did one of these in January of 2023, and you can look back. I'd predicted a price of 35 to 45,000 US by December of 2023, and we hit almost exactly on 45,000. Like, subscribe, and share, and this is not financial advice. Do your own research. Here's the Bitcoin monthly chart. We have the 10-month simple moving average is the black line running through. It's been a good predictor of bear and bull trends. You can see we've had 11 months of consecutive monthly closes above the 10-month SMA. So the green elliptical shape, kind of circle shape, is covering the last 11 months. They've all closed above the 10-month simple moving average. We're clearly into the bull market. The bear market was typical of previous bear markets. Some people said it would be different this time, but it was very simple in terms of the length of the bear market. The fall of around 80% from the high of 70K down to around 15K. So it's been very typical. And I think we'll have some typical results moving forward. In other words, we're going to clear all-time highs and move significantly higher here. You can see as of January 5th, we're at 45,200 US dollars. And I think December closed at around 42,500. In terms of the sentiment cycle, I think we're at the far right optimism. Perhaps, people who stay in crypto all the time are probably more in the excitement level. Your average mainstream retail investor might be closer to depression because of losses they had from FTX, Celsius, BlockFi, etc., or not wanting to get back in. You can see probably some people re-entering the market. There's hope and relief. So we're definitely on the uptrend going towards a top here in the next maybe year or two, where we'll hit euphoria at some time in 2025, likely, perhaps sooner. The biggest news comes next week. Bitcoin US-based ETF approvals could happen next week between January 8th and 10th. The market seems to think this is about a 95% chance of happening, and I would agree. There's been a lot of activity, endless meetings between the SEC and the various ETF funds, and even as recently as yesterday there was meetings. And so I don't think you'd have this level of activity from the SEC if they were going to delay the proposals. So it is looking good. There are 13 spot Bitcoin ETF applications. Here's a list of some of the major ones. ARK with Cathie Wood is the first on the list to get approved or rejected. You can see BlackRock will have the iShares Bitcoin Trust, VanEck, Bitwise, WisdomTree, Galaxy, Fidelity, and Valkyrie, totaling about 20 to 30 trillion US dollars of assets under management. A big part of the excitement is the floodgates this will open, and that even if something like 0.5% of their clients start allocating to Bitcoin, this would be a massive amount of new money coming into Bitcoin. Estimates of $100 million a week. If so, we will have a continuous flow of buy pressure, and notably, a lot of these buyers will be holding long term. Coins will be purchased by the funds on behalf of their clients and stored at Coinbase. This will be auditable, and it'll be very easy to see this accumulation happening. A lot of people are talking about the gold ETFs that came into existence in 2004. I believe the first US-based ETF was State Street, which was launched in November of 2004. It was the first US-based gold ETF. The ticker is SPDR. there were inflows of $1 billion within 3 trading days. And so there's some comparisons here saying, well, gold from 2004, after the ETFs came into existence, had a major bull run from 2004 to about 2011. So it was about an 8-year bull run. The gold prices went from about $400 to $1,800, so about a 5x, and that this could be a precursor to what happens with the Bitcoin ETFs and the price impact. Some will argue that gold and Bitcoin are completely different. Gold has 5,000 years of history that Bitcoin doesn't, and that's why the gold ETFs triggered such investments. Yes, however, I think information moves much more quickly. There will be a lot more speculation in the Bitcoin price and market, and you'll have a lot more advertisements, a lot of social media picking it up, a lot of hype. So there is an argument that the Bitcoin ETF news and impact could be greater than gold. You're also looking at a Bitcoin market cap much smaller than gold's would have been at that time. So gold probably already had a very significant market cap prior to that price run up. Another very bullish metric that Bitcoiners are pointing to is that for the first time we are entering the halvening and a bull cycle where the available supply for trade is falling. So you can see the blue arrows and the orange bar indicating supply available for sale on exchanges, and then you have the Bitcoin price at the top. You can see supply available on exchanges is falling. We have a very strong hodl position with coins off of exchanges. So you're having a supply crunch, and basic economics are demand and supply. We have demand rising because of just the typical bull cycle and sentiment and greed. Then we have the ETFs launching likely next week, and new buyers coming in, and perhaps a very steady, large amount of daily bidding coming in and buying, again, into people that will likely hold the coins for longer periods of time. And then we have the supply falling. So we have the halvening and the mining supply being cut in half in April, May, but also the coins, just a bit of a supply shock coming in where there just are not enough coins going around to support the amount of demand. And of course, this means price goes up. I'd like to add a section here on reflexivity versus sentiment, because I don't think this is fully understood, especially amongst non-Bitcoiners, the difference between reflexivity and sentiment and why this matters in the context of the potential ETF launches. Reflexivity is much more than sentiment, and I'll go into that in the next visual. Reflexive systems in the context of investments and asset prices can be seen as a positive feedback loop. So perception, price, and fundamentals operate in a positive feedback loop by influencing one another and accelerating the process. So you can see in the diagram here at the top left you have price increasing, which triggers a perception improvement. This is followed by fundamentals changing, further perception improvements, and another increase in price in perpetuity. Everyone can easily understand the idea that as prices rise, people want the asset more. It's quite logical that as the price rises, the perception will improve. That's quite basic, but I think where reflexivity is interesting as a theory is the addition of fundamentals into the equation and the loop. By fundamentals, we're talking about an eventual significant change in the nature of the asset itself, so that price triggers perception, and then perception reaches a point where there's a fundamental change in the asset that is irretrievable at some point and becomes sort of built into the loop. Once this new fundamental is established, perception moves to a higher level, as it were, and the price increases accordingly, and repeating the process. Again, a cycle of price, perception, improved fundamentals leading to a higher level of perception, a higher price, etc. So let's be more specific here, and let's look specifically at Bitcoin in terms of price, perception, and fundamentals. We're at the 15-year birthday of Bitcoin, and we can see this has been happening. And then looking forward, specifically the ETF's potential launch next week, and how reflexivity might explain future price increases. Okay, so with Bitcoin from its inception, you had obviously retail adoption increased. Okay, so we had more and more people getting wallets and buying the coin. And of course, the perception became more positive, and you saw an increase in price. So the Bitcoin price started to rise. As the Bitcoin price rises, again, you have an improved perception of the asset as being a way to make money. But next, you have something that might be called a fundamental change, where it was made legal tender at some point in countries like Japan or the US, and that this legal tender status fundamentally changed the nature of the asset that is irretrievable. In other words, we're not going back from this. Of course, that led to further price rises and another level of improved perception. Once again, people are making money, and the asset is becoming more widely adopted. So according to the theory, these sequential fundamental changes will build and compound along with price and improved perception to cause this reflexivity to drive price and adoption forward. So now we come to the ETF approvals potentially next week, and we have another fundamental change to Bitcoin. Once the ETFs are approved, they are likely going to be there permanently for the foreseeable future and become a fundamental state change in the Bitcoin story. Again, perception will rise because the ETFs will give a legitimacy to the asset class. You'll have a larger adoption, larger numbers of people owning and talking positively about Bitcoin. Of course, what's going to happen, according to reflexivity theory, is that the Bitcoin price will rise again and continue to build. And so this is the idea of how reflexivity is much more than just sentiment, and it's much more than just number go up technology where people get greedy and want to buy something that's going up in price. The difference is that fundamental changes occur that make the asset class more and more desirable in terms of the opinions of investors. So back to our Bitcoin monthly chart, and here are some very broad speculations about the Bitcoin price this year and leading up to a price prediction for December of 2024. Fairly simple analysis here, but I think we do get a move higher if we get the approval next week. There could be some obviously spikes up and down, sell the news, and then people buying back in. But overall, I think it'll be quite bullish. I think we may get a surprise how much new money comes in. At least in the beginning, there will be a lot of hype. And that we do see a price towards 50 to 60,000 US dollars in January, February. We do have the halving coming in April, May of this year, where the supply will be cut in half again. At that time, the stock to flow ratio of existing versus newly mined or new supply of Bitcoin will drop below gold. So I believe the new stock to flow percentage for Bitcoin will be below gold for the first time in history, and it will be one of the strictest stock to flow ratios of any asset in the world. That will also be talked about. And so we have more catalysts. We're in a bull market. We could definitely have a mid-year pullback or some sort of FUD news or some sort of scare event that would bring us back down to maybe 40K, somewhere around there. But I think we're going much higher by the end of the year. I have a number for December 2024 of 80,000 to 100,000 US dollars. I think that's actually quite conservative because things are moving so fast and we've already started the year at 45K. And so there are predictions for prices in the range of 125K or higher, even in 2024, with the idea that we still have 2025 being the bull market. So price targets are getting crazy. I think my estimate's reasonable. It's bullish, but it's only a 100% upside from our current price of 45K. I think it's reasonable. The fact is that Bitcoin is still a tiny market cap versus global assets. We have about $500 trillion in global assets. You know, we have about 300 trillion in real estate, 120 trillion in stocks, maybe 120 trillion in bonds. We have 6 trillion in cash and money markets, 10 trillion in gold. And we just need a very small amount of this to spill over into Bitcoin to hit this 80 to 100,000 US dollar mark very quickly. Bitcoin tends to surprise both on the upside and the downside. This number could be beaten quite easily, but there will be selling at the 100K range and new highs. And so as much as there's a lot of hodl positions, I think that will bring out some of the sellers. We also have leverage and other things that throw off or rather increase the volatility. You will see a lot of leverage like we saw in 2021, and we saw that blew up. So there is a chance that leverage gets out of control and it causes some major crashes and brings sentiment out of the market. But that said, I think we're moving higher and things are looking extremely good, even for the most bullish Bitcoiners. Thanks for listening. I have some other videos coming out soon. You can follow me on Twitter. It's at Gresham's Law 7. Please like, share, and subscribe. Thank you.